G'day traders, Sam here from Trade2Prospa. Looking at something different, one of the team members has asked what I think of this palantir technology's bottom, and I'll give my thoughts. From a macro perspective, very similar to the likes of Bitcoin, we have this downward trend, and what stands out mostly is this strong move from this area. The breakdown from there all the way down there looks like a strong move. So that gives me the thoughts that it's a 2 to 3 move on the Elliott wave perspective. It does not look like, from a macro perspective, a wave 5. From here to, you can see 1, 2, 3, 4, 5 on those, not the macro, but in between. It is a wave 5, and then we've got this A, B, C correction type of thing, and then we're going to do another wave 5 down, a smaller version. And that's why I got my fibs over here. That is my Elliott wave perspective. When we look at this structure, excuse me for a sec, it reminds me of Bitcoin, and I'll give you my thoughts on that. But what we can do is, from this point onwards, we can do an assessment, and let's do that, and I'll break it down on how to trade it. Let me just save this, delete all of that. Okay, so what we have, if you use a Fibonacci from there to there, just give me a sec, reverse, we've got the 0.618 rejection. So that was our rejection there. So it's a lower high. Then we came down to this level, and then we got the 0.5 as a rejection. And then when we came down to this one, we're getting our, not getting our 0.5, we might get a double top, whatever the case may be. It's looking weak. Oh, geez, I got rid of that diagram. Let me just bring it out. So we've got Bitcoin here, this chart here, a copy of the latest results, and you can see very similar results. We had an ascending or a rising wedge or channel of some sort, hit the 618. So what we have, in a way, it looks like what looks like an accumulation. Just hold on for a sec. Over here, what looks like a Wyckoff accumulation. So we had our selling climax, we had our upthrust, and we're coming down to the secondary test, and then what we're seeing is probably a double test, very similar to this, and then this last effort. And if we were to play it like similar to Bitcoin, we'll bring our levels up to there, and we could see what is likely to play out. So looking at this Wyckoff structure, we've determined our ranges. We have this previous support, and we saw that got a good rejection there. So if there's another attempt to get there and it gets a rejection, especially with this breakout, then it's likely to go sideways for some time, and then that will be proof that that's accumulation. Otherwise, it could play this role and then just make a move to the upside, probably hitting the 618, and then coming down so look to shorting there, in my opinion. This Wyckoff structure is not applicable based on the count and the fact that the next year is likely to be a really bad year. Makes sense that wave 5 is down there. Finding the right entry in this one really requires some good judgment. If we were to look at volume, let's see what it does tell us. and not sure, but let's reset. There we go. So this is a daily. The volume hasn't really picked up at all. Still accumulation. If we look on the 3-day chart, volume is not impressive either. So this is likely to, in my opinion, likely to go down. If we were to look on a few indicators, they'll probably help us out as well. So let's just look at that. One thing that is also that comes to mind is this this one here. Hold on. This life cycle. If this is the top, this is the markdown PS, and then we're probably in this strategy, this area potentially, or this another markdown phase. It's not looking good to find the bottom. So the bottom is, I believe, further to go down based on this structure, life cycle. Like I said, how you trade this is probably looking for this trend line to break. It's clear evidence that it's got a number of touches. And so if it breaks to the upside and we get a rejection on the 618, it just shows you that we've got higher lows. So if this was to come down, it's just another proof that there's higher lows. And then we get this distribution structure of some sort and then further down. So this could be another fake out if it was to do that, because our trend is down and these levels can be fake outs before they go down. So we're going to be here for a while, potentially. That's how I see it. The other aspect of, if I was to measure the target, I can just flip this to the other side and let's just do this. And wave 5 could be anywhere, probably down here for the short term. However, it's not going to be easy how to figure this one out. We have to go with assumptions. So if this is my, if this is 1 all the way down here, then we can see this really bearish scenario. But this could go down to that level there as well. So this long-term wise, this is looking bearish at the moment. So let's just add the indicators. Let's see what see if there's confluence with the indicators, just to confirm. So we already had it. Short term, like I said, it's likely to range. We've got some bullish divergence in the making. However, we also have a bit of resistance on the top. So when we go bullish and bearish. If this was to break above the 50%, that is our key level. So this is on the 3-day chart. If we can break up above this level, then we can go a bit bullish. So this might be coming in. However, if we break below this, it's likely to come down a lot. And so I'm not saying it's going to do it now, but you can see that it could probably bounce off here, come down back as well. If we look on that 2-day chart, the 2-day chart is also, RSI has done a good job capturing that, capturing the levels, and you can see that rejection as well. So it is coming into an apex on the RSI on the 2-day as well. And on the daily, definitely below 50%, so there's downward momentum. And historically, this area has shown that there's a bit of support. Let's look at the weekly. Weekly is probably where everyone looked at. So there is upward momentum on the weekly, but you can see how we found resistance again. Geez, weekly got the knockback, and the weekly trend line. So this, it really depends on the weekly. At this point, that's a bearish candle on the weekly. We've got one or 2 days left, and that's not looking good. So this trend line does make sense on the weekly, and we haven't added moving averages, and so let's add that and see what it tells us. I just got distracted from a phone call, so I forgot where I was at. Looking at the weekly, we can see even the weekly has a resistance line on the RSI. So that's confluent. So if we want to be bullish on the weekly, we want to see it break that level, also the horizontal level. So we want to see that break. Otherwise, if it breaks that level on the weekly, expect it to come down. The 50% level is there. We had a rejection there on the 50% on the RSI on the weekly. So it really corresponds well with the RSI and the Fibonacci. So there's a good alignment with RSI and Fibonacci. Therefore, this trend line makes sense. It's a grind. It's a grinding trend line. And therefore, if it breaks that, it's definitely going to be bearish, come down. So it might wick down, but I think it will make its way down. And when you go bullish, when it breaks that line, keep looking on the weekly if you want to trade on the weekly, as well as look at the structure. So if this was to continue to come down, the way I look at it, it's got one touch here, second touch, third touch. If it drops more, the fourth touch or fifth touch might work. These could be reversal. And anyway, that's something that I've been looking at. A bit of a channel there. We're role playing, but for the time being, small time frame, bearish weekly candle, and the RSI is also reflecting that. I'm going to leave that, guys. Hopefully, it helps you out with planning, and please give me a like and share. Talk to you soon. Cheers.